Welcome to stockmarketfunding.com. And this is a daily chart. And it's on Google. Okay. And it's right here. Let me get my chart set up. Welcome to stockmarketfunding.com. Once again, this is the Google. And basically, we've been out to buy these calls at $15.80. We've had bids at 9.5. They've come down. They have lost $5 in value. That means the public is writing it down again. Say, I love to write the calls down. I love to buy high, and I love to write the calls down. That's a 540 call. And basically, we're out at $9.5. $15.80 is a high. $5 down in the contract to the penny. That's $5 haircut. And everyone barreled in on them and bought them at the highs of the day. But guess what? SMF Pro Traders, on a percent DS on a daily chart, we're down to 10.81, and the pickings are getting ripe for the pickings. The 200-day simple moving average remains at 532.48. Put your limit orders out to buy at 532.50, but let me remind you of something. If we come down and test it, we got to bounce. If there's a sell through, you could see a lot more down move intraday. If stock market orders are triggered through this green line, it's a 200-day simple moving average. So right now at 532.50, you know, you could buy, you could do it light, add 50 shares. If it holds and we start to bounce, we're getting kind of like sold out on a percent DS on a daily chart. That's the gift of buying that. That's also going to be the gift that when that 200-day holds, that means we're going to be able to buy these contracts. And I got a 950 bid out here. They were 1580 on the high. I don't think anyone's retail here. Sorry. We are pro option master market maker traders. And that means wholesale takes out all the risk. 1580, I got a 950 bid. You've been given a gift. There's the 200-day moving average. And we're going to get sold out. Percent DS on Google on a daily down here is that's ripe. We're getting sold out from the gap down up here to that low. And it looks just like this. When you get sold out near term, that's the earnings gap down. This is the runoff to the 200-day moving average at 532.50. You can get one of these little wicks that go down below it, you know. It would be like this, a wick. But then you bounce right off of there. So I would say that I'd do 50 shares maybe right there. And if you come down, you'll bounce back up above it. The trick to this trade is that stock market orders are not triggered, and it gives the stock a little bit more of a down move. And basically, yes, you're day number 3 into a daily sell signal on the daily, because you are. And basically, the bottoms over here at support are going to be roughly right in here. Let's take a look at that. That's this bar right here. This is that bottom. This is that breakout that happened right here up to there, to where that, and there's your gap down. There's your burn, earnings gap. Very nice. Very nice. And once again, options at $9.50. Very, very nice. That means you're taking $6.30 out of the trade. If I'm buying 10 contracts, I'm saving $6,300 of risk that everyone else wrote down. That puts me at the wholesale boneyard called Wholesale B